Hello, everyone, and welcome to your 2021 BSA, OFAC, Patriot Act, ID Theft Red Flags, and Financial Exploitation Prevention Act training. So we got a lot to kind of get through today, as you can see just from this first slide here. So I'll try to make it as engaging as possible in this new setting that we're in as we're recording the training for you guys to watch through onboard. Stephanie will be sending out some information on how to attest to the fact that you have completed the training. That's going to be important for us to be able to track who's actually completed the training and not. So be on the lookout for that information. Nonetheless, let's jump right in and get started, and we'll start talking about the BSA. So the BSA was enacted in 1970, and the purpose of this act is to prevent money laundering, tax evasion, terrorist financing, and other criminal activities. The credit union is required to have a BSA program in place, and that program must incorporate policies and procedures that include internal controls to make sure that the program is functioning as it's intended to. Record keeping requirements, so any documents related to BSA are required to be retained for 5 years. It requires that we file certain reports such as CTRs and SARs, which we'll talk a little bit more about in a few minutes. We also are required to conduct annual training for any new staff coming into the credit union, any existing staff, as well as the board of directors. We must complete an independent audit on an annual basis. And we have to identify a qualified and knowledgeable BSA officer. So we'll jump right in then to CTRs, or currency and transaction reports. So CTRs are required to be filed with FinCEN for any cash transaction that exceeds $10,000. So one of the ways we like to explain this to tellers specifically, as they're the ones dealing mostly with the cash, is did $10,000 or more walk in the door or out of the door, right? So is it physical cash coming in or going out exceeding $10,000? This could be in one transaction during the day, whether that's a deposit or a withdrawal. It could be an aggregate of multiple transactions during one business day. Any cash exchanges, so if someone comes in and they want to exchange small bills for large, for instance, and it exceeds $10,000, we would be required to file a CTR on that as well. And any cashback transactions, so if someone comes in to cash a check that is more than $10,000 and they get the entire balance back in cash, that would require a CTR. So we also, for any shared branching transactions that are cash that exceed that, right, for a guest member coming in, we would be responsible to be the institution to file that CTR as well. During the process, and in order to file the CTR, we do have to collect the occupation of the person who is conducting the transaction, their date of birth, social security number, name, and address. So we do have some exemptions built, some CTR exemptions built within the BSA. Some businesses have the ability to be exempt. So there's 2 phases. The first, phase 1, is any transaction involving a U.S. depository institution, whether it's federal, state, local government. Most corporations that are publicly traded entities on the New York Stock Exchange, the American Stock Exchange, or on NASDAQ. So they're automatically exempt. There's nothing that the credit union needs to do to file an exemption for them. And then there's the phase 2 exemptions. This is for the members who are conducting business regularly. They regularly would meet the requirement of CTR filings. They're non-listed businesses or payroll customers. We have to, so after the first transaction that would prompt a CTR, we would want to exempt them from we have to conduct a review of their account, make sure that they meet the exemption requirements, and file that exemption with FinCEN. We then have to review that exemption on an annual basis and update it to indicate that we want to continue to exempt them from CTR filings. Right now, we have 2 business accounts at the credit union that are exempt. Just for some reference, that's Polly's Country Market and McDonald's. So just a lot of cash flow coming in and out on a regular basis that is anticipated and easily explained. There are other certain industries that do not qualify for an exemption. So for example, lawyers, real estate companies, car dealerships, that kind of thing, where it may be a little bit easier to track the funds or harder to track the funds and easier to launder money. So those businesses cannot be exempt. So we'll jump right over to suspicious activity reports, or SARs. So you guys know we report out on the number of SARs that we're filing each month. So there are some at the board meetings, and there are some specific times that we are required to file those. So for instance, anytime there's suspicious activity that involves $5,000 or more, and we know who the suspect of the transactions or the suspicious activity is, we would be required to file one. In the case where we know there's suspicious activity, but we're not sure of who the suspect is, and those transactions are aggregating or exceeding $25,000 or more, then we would be required to file. We do have 30 days after the date of the suspicious transaction, or the date we become aware of the suspicious activity, to review the account, conduct an investigation, and determine whether or not a SAR needs to be filed. The exemptions from CTRs that we just talked about do not apply to suspicious activity reports. So there's no member, no business, nothing that is exempt from suspicious activity reports. So the increase, and we've talked about this a lot too, the increased number of SARs that we've seen over the last couple of years or so, are a result of any suspected marijuana related business activity that we're currently finding. An increase in those scams. The romance scams is a big one right now, right, where it's kind of hard to really identify where those funds are coming from and where they're going to. And then we did see a lot of unemployment and SBA fraud this year as well, that resulted in the filing of several SARs. So some examples of things that would require us to file a SAR, just to take it a little bit deeper here, is suspicious documentation. If someone's coming in or they're online and they're wanting to open an account or make changes, apply for a loan, something like that, and their pay stub seems to be forged, or their ID is fake, or appears to be fake. Those are all instances that we would investigate and determine if we needed to file a SAR. Insider abuse. So this is for employees of the credit union. So any instance of insider abuse. So if it's, a teller borrowed $5 out of her drawer to go to lunch and she was paid it back right as soon as she got back from lunch, that would be considered suspicious and require a SAR to be filed. And then there's structuring. So structuring refers to conducting transactions in a way that would avoid the BSA, specifically the CTR reporting requirements. So conducting your transactions just below that $10,000 threshold in one day or over multiple days, or just regularly throughout the week or whatever, would be considered structuring and suspicious. It can also be the way that members or businesses conduct their transactions, right? So if they're visiting multiple branches in a day, or making sure that they go see different tellers each time they come in, and making multiple deposits, that would be considered suspicious as well. If a member refuses to provide any required information, that may flip to a SAR as well. And then going back to those scams, right? Any wire or electronic funds transactions or transfers that can't be explained, right? So I spoke a little bit to the romance scams, right? Where funds are coming into the accounts and then they're quickly being wired or transferred out, and it's really hard to identify where they're coming from and where they're going. So we'll jump over to monetary instruments really quick. So the credit union is required to retain specific information in regards to monetary instruments, specifically that are purchased between $3,000 and $10,000 in cash. So the purpose of this is, for any those individuals who may be conducting suspicious activity or money laundering or terrorist financing, whatever it may be, who know what some of those thresholds are, right? Like the monetary instruments are a way that they may use to clean or wash their money, right? And doing it with those cash, so turning the cash into the monetary instrument. So we're required to maintain a record of the name, date of purchase, what type of instrument. So is it a cashier's check, a traveler's check, a money order? What's the serial number of the item that was purchased, and the dollar amount of that. So the good thing with this one is there's nothing additional that the tellers or employees of the credit union have to do. The core system actually tracks this for us, and we have the ability to pull some reports to be reviewed by auditors and examiners and that type of thing. So we do have some enhanced due diligence at the time of account opening that we conduct. The first piece is to identify and verify the identity of the members. If it's a business account, right, this is requires a certification of beneficial owner. So requires that we're really identifying who owns that business, to what percentage, and then completing that certification of beneficial owner form. The next piece is understanding the nature and the purpose of the member's relationship. So kind of asking some additional questions to understand how they're intending to use their account. We do conduct ongoing monitoring to maintain and update their information, identify any suspicious transactions or anywhere where it's not lining up, where they've said this is how we intend to use our account, and then this is how we're actually using it. This piece of the act had a compliance date of May 11th in 2018. So specific for the business accounts, Meridian Link is the software program that is used to open new accounts for businesses and individuals. So there is a specific questionnaire at the time of account opening that goes through a whole list of questions for the employees to ask so that we can really understand the intended use for the account. It also helps us identify any potential money service businesses. So right now we have at the credit union, I think 4 money service businesses that are still open and active and using their account regularly. But we are not currently opening any additional MSB accounts. In order to be considered an MSB, the business itself has to do things like check cashing, right? So if someone can walk in there and just cash their check, or they sell monetary instruments, or they're a money remitter, those types of things. And if they're identified as an MSB, the business itself has some very specific requirements to comply with the BSA as well, which then transitions over and puts a little bit more responsibility on the credit union so that we can make sure that they're doing what they need to do to comply with the BSA on an annual basis. The other piece that we wanted to mention here is marijuana related businesses. So currently today we are not opening any MRB accounts, but the questionnaire is really intended to help employees identify whether or not a business who's requesting to open an account may be an MRB. Should they come to the determination that they are, we would refuse to open the account at that time. Excuse me. So the USA Patriot Act is the next piece we'll talk a little bit more in depth about. So this is the uniting and strengthening America by providing appropriate tools required to intercept and obstruct terrorism act of 2001. So this act is a direct result of the 9/11 terrorist attacks. There's three pieces within this that we are required to comply with. The first one is the 314A, which is information sharing with FinCEN. There's 314B, which is information sharing with other financial institutions. And then 326 is the verification of identity piece. So 314A is that FinCEN sharing piece. So this piece requires that we search our entire database on a regular basis, on a periodic basis, when FinCEN sends out their updated list, to make sure that we don't have any matches that we're currently conducting business with. 314B is information sharing with other financial institutions regarding individuals, entities, organizations, or countries that may involve money laundering, terrorist activities, those kinds of things. We are currently registered to share information. That's one of the requirements is if financial institutions want to share information, they have to register with FinCEN to say, yep, we're going to do this. We also have a responsibility before we share information with another institution to make sure that they also are registered for the 314B information sharing as well. And then 326 is the identity verification requirements. So for this piece, it requires that we have a comprehensive member identification program in place. And so this is done at the time of account opening to make sure that the person who is requesting to open the account is the person that they say they are. So we do this through two separate ways right now, documentary and non-documentary. So the documentary piece is covered by any unexpired government issued ID. So driver's license, a passport, a state ID, anything of that nature. Non-documentary method that we use a combination of the two. Our other databases, such as Qualifile specifically, is what we use to do that. Credit reporting agencies or other public databases we can use to meet that requirement as well. So we'll jump on over to OFAC. So OFAC is the Office of Foreign Asset Control. It's their division of the U.S. Treasury Department. And their responsibility is to impose economic and trade sanctions against hostile targets. That could be countries, entities, individuals, but to further U.S. foreign policy and national security objectives. So economic and trade sanctions, travel and travel related restrictions, any freeze on government or private assets against foreign countries, terrorism sponsoring agencies, international narcotics traffickers, or certain commercial enterprises. All of those things are imposed by OFAC. So a few things, other things that OFAC does. So they release this SDN, the specially designated nationals and blocked persons list. So another piece of that Qualifile that we talked about for the verification is does a check to make sure that the individual in front of us or requesting to open an account is not listed on the SDN list that is put out by OFAC or on the blocked persons list. We have to do regular scans of this as well. So currently our software Verifin, which is what we use basically to comply with the BSA. They run an automatic nightly scan happens of our entire membership database against the SDN list, and it would pop out any matches or anything that we would need to do additional research or understanding of. OFAC checks are completed at the time of account opening. So again, going back to that qualified piece, right? That's the purpose of doing that, is to make sure that they're not the individual isn't listed on any of those blocked persons or SDN lists. And then if we happen to have a match, which honestly I've never seen a true match, see what I did there, since I've been at the credit union, but should we get a match, there is specific steps that we have to go through to notify OFAC of the match. We have to do that within 10 days, and then basically we wait for OFAC to tell us what to do and how to proceed, whether that's to release the funds, to send them in, whatever. OFAC would give us that direction. So record retention, this one's pretty quick and easy. Any information related to BSA, OFAC, or Patriot Act compliance, we have to retain for 5 years. So there are some pretty stiff penalties that are related to BSA and OFAC violations. So for the BSA piece, there's civil penalties, as you can see on the slide here, that can be up to $100,000, as well as criminal penalties up to $250,000, or an imprisonment for 5 years, or both. And then the OFAC penalties are also stiff, civil and criminal penalties in this area as well, up to $250,000 per incident, for the corporate and personal fines up to $1 million and 12 years in jail. Important to note here, right, these penalties are imposed for really intentional non-compliance with BSA, right, and OFAC. So I always joke with the employees, because I'm actually listed as the BSA officer currently. I'm like, please don't send me to jail for not filing your SARs and your CTRs. But to get a penalty would be a result of a pretty significant non-compliance issue. So we'll also talk just a little bit about the FACT Act, which is the Fair and Accurate Credit Transaction Act, and red flags rule. So this is the act that requires we have an ID theft prevention program in place. It is meant to really identify any suspected or attempted identity theft. The red flag is defined as the pattern or practice of the specific activity, which would indicate the possible existence of the identity theft. And it also identifies what accounts are covered accounts under the act. And basically any account that's used for family or household, personal family or household purposes are going to fall under that covered account. Any other account where there's reasonably foreseeable risk to a consumer, the safety and soundness of the credit union from identity theft, including financial, operational, compliance, reputation, or litigation risks, would also fall under that covered account piece. So basically all of our accounts are covered accounts. And so we have some responsibilities inside of that. Every year we complete a risk assessment to kind of gauge where our risk tolerance and levels are from a red flags rule perspective. So when we conduct the risk assessment or update the risk assessment, we review our program, right, that we have in place, and we take a look at any previous instances that we've experienced of identity theft. And we determine if any changes need to be made, or is our risk increased? Is it lower? Where does it currently sit today? It also, in the risk assessment, takes a look at those, going back to the types of accounts that we offer, right? The method that we can use to open and access those covered accounts, obviously, opening accounts online and having mobile access, right? That increases the risk slightly to be a victim of identity theft. But the 2021 risk assessment did indicate an overall low level of risk here. So in those areas where we know the risk is increased, we also are able to implement some of those mitigating factors that help us to avoid that. So the last piece we're going to talk about today is a new piece, literally new as of September 26th, I believe was the compliance date for the Financial Exploitation Prevention Act. We actually had a feeling and an inkling, right, that this was going to become a law. And so actually we started implementing pieces of this last year through our training and our policies and procedures and things like that. And so we've just kind of updated those this year as of September when that became a law in the state of Michigan. And so what this does is it requires that we have guidelines and procedures in place that will help us to identify any financial exploitation that we feel is being taking place with any of our members. And so we have a responsibility to train our employees on what some of those red flags are that would identify maybe the existence of that taking advantage of. Some of those examples are, frequent large ATM withdrawals, an increase in wire activity. If someone's trying to conduct transactions without the proper identification, I'm calling in to say, I'm my mom who is elderly and not able to really handle her own financial affairs. And so I'm calling in. I have no right to call in, but I'm doing that to either find out how much money she has, access her funds, whatever it may be. Another red flag or indicator could be a recent change of address on the account, or if there's an increase of non-sufficient funds activity and things like that, right? Where something just doesn't feel right. This kind of goes back to the suspicious activity reports as well, right? A lot of times it's just a gut feeling that we get, and so we rely heavily on the frontline staff to report any concerns or possibilities of financial exploitation. And it's important to note for this, it's not just elderly. This act really is meant to encompass any vulnerable individual who may be at a higher risk of financial exploitation. And so we have requirements where we have to do reporting, a lot with adult protective services. They'll start an investigation. We have to now ensure that they're following up and that we know what's happening with the cases. And so a lot of good work being done here to make sure that individuals are not being taken advantage of. It's one of those things that we see a lot, and it's sad. So the fact that we have some leverage now to hopefully step in and make a difference is kind of exciting. So that is all for the training today. I know this is, again, kind of a weird new experiment we're running with conducting the training this way. And so I encourage you guys, if you have questions or if there's something you need more information on or something just didn't quite make sense, please reach out to me personally, email, phone call, whatever. I'd be happy to chat and provide any clarification if you guys need it. Don't forget to attest through Onboard that you have completed the training, so we have record of that for the examiners when they come in. And yeah, I hope you guys have a great holiday season, and I will see you all in December, hopefully.